Good day, fellow investors. Welcome to 10 Stocks Analysis Sunday. I will do 10 videos because I started preparing the 10 stocks video in one, but then I came to 30 slides for eBay and said, okay, to do a full thesis, better to do a specific video. Then you can check in your notifications which companies of these 10 are most interested for you. We'll do the videos on Monday and likely Sunday. So enjoy this. If you enjoy the content, of course, smash that like button to support the channel. Yesterday we did this video discussing the macro environment and the fundamentals and the issues between holding cash, waiting and seeing that cash deteriorate, or buying stocks and seeing those stocks crash down. So all of these have crashed already significantly. There is always more room, but for finding that answer, you need to do a bottom-up analysis, stock by stock, and then see what fits you best. Let's start. eBay is 52% down, and I thank you for your suggestions on what to analyze. I welcome those always, but please, on suggestions, write them in the comments so that the comment is valuable for all other watchers. Business name, ticker, what does it do? What is the risk? First, we start with the risk as value investing. What is the reward? What is the catalyst? And why do you think that the stock should be analyzed by me, or what is it there? So if you put a suggestion like this, I will certainly look at it. Let's start discussing eBay. The first issue that I see with eBay, it is that the business is slowly but surely declining. That's a given. Revenues have been slowly declining. Of course, there was the 2021 boom with everyone being at home, but declining revenues and everything leads to also declining margins from stimulus and mobility restrictions, and 37%. The current last quarter margin is going down. Free cash flows are also going down. So it is, let's say, a deteriorating business, a turnaround, and now we have to see at what price it is oversold and becomes a bargain, if it becomes a bargain. There is also something very important here, 7.7 billion of debt, and the company has that but is focused on capital returns, and capital returns in the way of stock repurchases. Now, stock repurchases, 3 billion spent instead of paying back debt on stocks in Q4 2021, and now much less spent on debt. Let me show you something. So we said billions spent in Q4 2021 when the stock price was twice the current price. I don't know why management always does that. When the stock price is high, they force those buybacks because they feel so strong. And that simply means that if you spent here instead of here, you spent 3 billion here, you could have done twice the benefit here, now that it is 50% lower, or here. So this is, yes, in one way value, but if the business doesn't grow, then it is destruction, because they spent 15% of the market cap, now 7% back then, to buy something that fell 50%. So buybacks do work, but only if the business is stable or growing forward. If the business is not like that, not an Apple, then we have issues. And yes, they do in even investments, the value of the investments, but the value of those investments is then again depending on the market, and with the current tech environment, we have to take that with a pinch of salt. The guidance there is negative, again, margins down, and earnings per share of around 4. But when it comes to businesses, I'm interested in earnings per share in 5 to 10 years. How will the business look in 5 to 10 years? And currently, eBay has no clear path to growth, no certainty there, just a turnaround story that the management hopes to turn around somehow. And the path to sustainable growth, so focus categories, advertising, managed payments, etc., etc. Active buyers. I'm also here because I recently bought the margin of safety. I found it on eBay for 600 bucks. I said, that's a bargain, let's buy it. And that's why I have the book behind me, so that's a positive. And they are looking for market opportunities expanding in motor parts and accessories. Yes, you can't wait to buy motor parts on eBay. Oh, let me check on eBay if they have my motor oil or something like that. Very, very questionable thing to do. Sustainability, yes, sustainable. Now, the thing is, we have to compare their stories to the price, of course. So $40, and they expect earnings per share of 4, and that is now the issue. That's a P ratio of 10, doing buybacks, but this is not an Apple business where they spend this 4 on buybacks. That's okay if the stock price goes higher. But if the stock price goes to 30 because of deteriorating fundamentals, then these buybacks are a waste of money, and that's a big issue. They will be accelerating growth at scale and make a lot of free cash flows and projected and then spend them on buybacks, but it's unlikely that that's going to happen. Let's look a little bit at what the market says. So this is from Seeking Alpha. If you want a discount to their premium version of 60%, you have the link in the description below. It's just for $99 per year, not $249. And Seeking Alpha, I like it not for the actionable ideas, I like it to gather information. So everyone says hold because nobody knows what will happen there, but I like this information, the 10-year information, and we can see declining revenues. I think they sold something here, but stability at best, gross profit stable and helped a lot by the pandemic and forced being at home. And if we look at the analysis, some say it's a strong buy, some say it's a sell, a hold. It's really, really unknown, but let me give you Warren Buffett's answer. 1985, Berkshire letter, what is he looking for? So here's what we are looking for, and that's eBay investing answer for me. Demonstrated consistent earning power, future projections are of little interest to us, nor are turnaround situations. Why? Because of the risk. What's the risk and reward with eBay? If the management doesn't turn the ship around, if you don't start buying more on eBay, why would you? They spend the 6, 7, 5 billion they make on buybacks and the stock crashes even more. That's a double whammy on capital destruction for shareholders. So I would prohibit them to do buybacks. I would say, okay, if we have extra cash flows, give them as dividends. Don't destroy it as buybacks. Or if you are a shareholder, sell it to eBay. You have to sell parts of your stocks to eBay. So it's a very, very complicated situation. And then with declining everything, we still have 7 billion of debt on those buybacks. Why they are not paying the debt? So it's getting risky to position that this might be worth 0 at some point in time, or somebody just taking over it from the debt perspective on the cheap because of the buyback focus. Now, when it comes to investing, also asking, is there something big that the market is not pricing in, a turnaround in the future or something like that? I'm looking at eBay, 2 billion free cash flows at best next year, declining likely long term. What am I missing? What is there that the market is missing and I'm not seeing it? Therefore, if we look at our YouTube portfolio for learning purposes, eBay is not even a contender here because I want businesses that have something of an educational purpose. And here, looking at how buybacks destroy value is not something that I want to add here. I'm sorry, eBay, but that's the situation. More videos coming soon. I'll try to do it every 3 hours for Sunday and Monday. I hope you enjoyed this. Check also my other videos, and I'll see you in the next video.